Aye, it's Poku Banks, baby. What's good, guys? We back, man. MMO gang. Let's get it. As you guys can see, it looks a little bit more professional. I got a new tripod setting. It looks a lot more cleaner, a lot more lighter. You know, you can see me a lot better now. It's from a different level, so it's kind of looking down on me. But yeah, man, after last week, after the Sam Lee's interview, it kind of threw me off out of my flow. I wasn't working correctly. It just, I had to take a little break. But now we're back. 3 videos a week. Let's get it. But yeah, I'm Poku Banks. I'm a 90-year-old uni student that loves talking about personal finance and entrepreneurship. And today we're going to talk about investing. And in particular, we're going to talk about why not investing is actually riskier than investing. And I'll explain to you my rationale on why I think this. Alright guys, here's a disclaimer. It's not guaranteed that you'll come out with more money than what you started off with when you invest. Make sure you do your research and seek a financial advisor if you have any questions about any investments. So let me just tell you what investing is and what investing isn't, okay? So people think that investing is day trading stocks or trading forex with high leverage and little to no risk. Look, this isn't investing, this is trading. There's a big difference, guys. They think you can lose all your money in one trade. They think to invest you have to take large risks to invest. Look, you can control your risk. No one's telling you to invest all your money. They think investing is a little bit complicated. They think it's too hard for them to comprehend and it's not for them. They believe that they need to be on Wall Street to invest. And they also believe they need to be wealthy, like the billionaires. And just to tell you guys, look, this simply is not true. You can do this from the comfort of your home. All you need is Wi-Fi, a laptop or a phone, and you can invest from as little as £1. You can manage your levels of risk and exposure. So either you can invest into low-cost index funds, which are very, very low risk, or you can move on to high-risk startups. You decide how much you want to expose to the market. Again, if you want to know more about the difference between investing, trading, and gambling, check out my video called The Investment Spectrum. It's Forex Gambling. Check that out. It's a good video. There are plenty of low-risk investment vehicles that you can invest into and decide whether it will be good for you in terms of risk. So one thing to look into is Booster. This is an ETF that tracks the index fund, the S&P 500, which also tracks the top 500 publicly traded companies in the US. In terms of return on your investment, you can expect on average 7 to 10% per year. Again, this is based on historical data back from 1957, its inception. Or you can look into the All World Index. So this tracks companies from all over the world that are doing well. So the US, the UK, Germany, all over Europe, and even China. Or you can simply just look into high-profile blue chip stocks. So this is your Amazon, your Netflix, your Apple. Again, guys, there's gonna be more videos coming out on this later on in the future. Alright, cool. So now let's move on to why not investing is actually riskier than investing, okay? Now, first of all, look, if you want to work the rest of your life till you're 65, 70, just to retire for 10 to 15 years, then go ahead. Go ahead, I don't mind. But that's not my portion, okay? That's not what I'm trying to do. What I'm trying to do, and I'm pretty sure a lot of my viewers are trying to do, is to reduce the time working, okay? So my retirement age will be closer to, 30s to 40s. And then spend more time in retirement doing what I love as a passion. Being able to do what I want, go on holidays whenever I want, seeing whoever I want. And in order for me to do that, you're gonna have to invest your money into something that will get you passive income to pay for your expenses on a daily, monthly basis. And in order for me to get to this position where I'm retiring between 30 to 40 years old, my investments will have to pay for my lifestyle. You have to pay for my monthly expenses. You want to get to the point where your money is working harder than you do. Compound interest, the power of compound interest, which is quoted as the 8th wonder of the world, is working harder than you do. It'll be making you way more money in the back end. Look, I'm pretty sure all of you guys, you want to live a good life. And I do too. But in order to do so, you need to invest your money or work a high-paying job to be able to do so. Look guys, if you want true freedom, so location freedom, time freedom, and financial freedom, you're going to have to take that risk to invest and come out your comfort zone. If so, you have a higher chance of living that good life. But if you decide not to invest, then you're basically guaranteeing yourself that you're going to be working for the rest of your life, until you're 65. And then when you're 65, 70, you have no energy to even enjoy the money you have. You want to spend 10, 15 years in retirement. Hey look, I'm about to get a little bit disrespectful here, but when you go to Tesco, Sainsbury's, and you see old people working the shelves, and that you can tell their back is hurting, that can't be you. Take that risk and invest, okay? That can't be you. In Jesus' name, it cannot be you. Okay, look guys, getting rich is hard, but being broke is also hard. So it's a case of where you gotta choose your hard. I'd rather choose a hard of going through pain to get rich rather than being broke. Do you understand what I'm saying? Hey look guys, how I see it is you can take the risk to invest and you have the possible chance of living a good life. Or you can take the guaranteed route where you're not going to live the good life and you're going to live a boring life for the rest of your life. Unless you're working your passion, don't get me wrong, if you're working your passion till you're 75, why not? Go ahead. To be honest, let's be real, not everyone works their passion, not everyone loves what they do, let's be real. Second point, inflation is actually a silent killer. Inflation is defined as a gradual rises in the prices of goods and services. If you kept £10,000 under your mattress for 30 years, In 30 years, it will be still £10,000, but it won't be as valuable as the £10,000 it was 30 years ago. 30 years ago, with that £10,000, you could buy yourself a nice BMW 1 Series. But in 30 years, £10,000 will probably only be able to buy your old Ford. Now, how us people in the UK, if you grew up in the UK, how we like to measure inflation is actually the price of Fredos, the chocolate bars that you see in the shops. Now, in 2000, they were 10p, okay, these little chocolate bars. In 2020, they're around 35p. They've more than tripled in price over 20 years, and that's the power of inflation. £1 can't last you as much as it could back in the day. Nowadays, it's like £100 is now the new £10. It just goes quickly, having fun. It's just that. That's the power of inflation. And essentially, how this relates with investing is that the Bank of England want to maintain a 2% inflation rate. That's what they aim for. So every year, the value of your money is decreasing by 2%. So for example, let's say you have £100. In 1 year, it'll still be £100, but in real terms, you can only buy yourself £98 worth of stuff. Now, you may think a £2 decrease isn't that much, but let's think about the millionaires and billionaires. If you had £1 million, next year you can only buy yourself £980,000 worth of stuff. You're losing £20,000 for doing nothing with your money. Imagine losing £20,000 just for leaving your money in the bank. So in order to defeat inflation, you now need to invest your money into something that beats inflation on a year-on basis. So for example, the S&P 500, which averages 7 to 10% per year. If you're getting 7% return on your money and inflation is 2%, that means you basically got a 5% increase in your money. You've defeated inflation and your money's still worth more than what it was last year. If inflation is 2% and your money increases by 2% on a year, you haven't really increased by 2%, it's pretty much stayed the same. You can still buy the same stuff that you could buy last year. Again, we have savings accounts for this. You put your money into a savings account. But in times where we're in right now, savings accounts aren't really giving us much return. So again, you need to invest your money. Again, look, either you can take the risk to invest and increase your money on a low-cost index fund, which is low risk, or if you don't invest, then you're pretty much guaranteeing yourself to lose money. So again, not investing is actually riskier than investing. People that are saving their money in the banks are actually losing money, With interest rates 1% and inflation at 2%, guys, you're losing at least 1% on your money. So again, you need to take that risk and invest. And guys, bear in mind, when I say invest, you don't just have to invest into, the stock market or into real estate. Again, you can invest into yourself to improve your knowledge, therefore you can use that elsewhere to make more money. It doesn't just have to be into, financial markets. Again, there's 3 things you can invest into. The financial markets, so this could be stocks, bonds, whatever. Into a business, so this is to make more money or generate more money, whatever. A system, create a system that makes you more money. Or into yourself, again, investing in yourself is priceless. This could be education, into a gym membership to make yourself a little bit more bigger, whatever. Make sure you get a return on your money. Most people work one job, they work paycheck to paycheck to paycheck. They depend on their money from the job, from the employer. In my opinion, this is the most riskiest thing you could do. Putting all of your trust into one company that pays you and feeds you for your family, okay? You don't feed your family, the company that you work for feeds your family, okay? You're putting all your trust into them. I feel like this is the riskiest thing you can ever do. God forbid, but, what if you break your leg? How are you gonna go into work now? What are you gonna do? This did happen a few months ago during the health pandemic. What if you made you redundant? What if you lose your job? What if we're in a recession? What are you going to do next? Yes, there's government schemes, but you can't rely on that forever. It's not going to be around forever. Trust me, the government are going to make the money back by raising taxes, so don't feel like they're just giving away free money. It's all a plan. Essentially, you guys have one source of income and you rely on the company that you work for to pay you. You're essentially betting on the fact that life isn't going to go normal until you retire. And to be honest, life isn't normal. Life is hard. Things will happen. You may get sick, you may break your leg, you may have to take some time off work. Look, what I'm saying is invest your money or your time to develop another source of income. So if these things do happen to you, you got other things that will still pay you. If you have other sources of income that can keep you afloat while, you may be sick or whatever, then at least you're still good. You can still feed your family. You won't be stressing because you have money coming from other sources. Warren Buffett, the OG, he even says, never depend on one source of income. If you do, you'll work until you die. And this rule isn't just for money, but this is for life in general. Never just depend on one person, one thing, or depend on one thing to go your way. Things may not go your way, and you need backups just in case things go wrong. During the health pandemic, my service accommodation wasn't doing well. Why? Because people weren't traveling as much, so I was losing money in my service accommodation. But since I had other sources of income, I was good. I wasn't strapped for cash. I didn't go bankrupt. My other sources of income helped keep me afloat. So again, guys, never depend on one thing. Look guys, I personally believe that anyone's working 9 to 5 or you're at university, you should always have another side hustle behind the scenes. You're 6 to 10. Build your empire. If you don't invest your time and your money into creating another source of income, you're literally, waiting for failure to come towards you. Hey, but guys, if you do want to get in contact with me, I've started a group chat called MMO Gang Mastermind Group Chat. This is where we talk about investments. You can network with other people, and you can even talk to me about any questions that you may have when it comes to investing, making money online, or whatever. It'll be linked down below. MMO Gang Group Chat. It's a 7-day free trial, and then it's £3.99 a month thereafter. Hey, but yo, I hope you guys enjoyed that. Make sure you comment, like, and subscribe. Comment any video ideas that you want me to do. Keep it up, man. You already know, man. Hey, it's Poku Banks, baby.